JJ the CPA here, going over the CARES Act that just went into play, which is massive. I mean, there is a ton of wonderful provisions in there to help us, help America, help small business owners, help individuals, help the self-employed. There's things in here that are unprecedented, never done before in the history of the United States of America in an effort to help. Now, let's cover in the CARES Act, okay, the retirement benefits that have come out of this. And they're pretty huge because what is the intent is that people can have access to their money, that if they don't have the money that they were planning to have, that they can use the money that they need for things that are needing to be taken care of because they brought in less money. I mean, this is the reason behind these provisions is to provide relief. It's not just a way to help people save on their taxes, okay? So on retirement accounts, check this out. Waives the 10% early withdrawal penalty for distributions up to $100,000 from qualified retirement accounts for certain coronavirus-related purposes made on or after January 1st, 2020. Income on distributions taxed over 3 years. That's huge, okay? That's two aspects here, okay? First of all, if you're under the age of 59 and a half, and if you pull money out of your retirement account, 401k, 403b, a qualified retirement account, IRA, okay? You have to pay tax on it, plus you have to pay a 10% penalty, which is nothing more than more tax, okay? So if you pulled $100,000 out under the age of 59 and a half, and you didn't meet some other qualification, then you would pay $10,000 in additional taxes. It's called a penalty, but it's just more tax, okay? What this is doing is waiving that. So if someone has to pull money out of their retirement account, okay, it's waiving that 10% penalty. Now, it does need to be related to the coronavirus crisis, right? So that need to be, well, it's not, well, I decided to go ahead and buy a car, I'll pull the money out of the retirement account. It's, I wasn't making as much money over here, or this effect of the coronavirus caused me not to have money to do this. And so, long story short, if you're having to pull money out of the retirement account, you're not going to pay that 10% penalty. Now, anytime you pull money out of a retirement account, okay, you do have to pay tax on it. Okay, so this isn't saying that it's a tax-free withdrawal. What it's saying is up to 100K, you don't have to pay that 10% penalty. But then the second part of that is that income on the distributions is taxed over 3 years. So if someone pulled out 100 grand, not only do they not pay the 10% penalty, but they will then just recognize the income on that to the tune of $333,000 in 2020, in 2021, and in 2022. So they're then paying the tax. That's huge because depending on what tax bracket you are in, it could be that there's actually technically less tax that would be due on that over time because the person's recognizing that money over a period of time versus all at once, which could put you into a higher bracket. Here's what else we've got. Eligible employees could receive loans for the lesser of $100,000 or the present value of their vested benefits in their employer retirement accounts in the 180 days after the bill's enactment. So the bill's enactment was March 27th, 2020. So they could receive loans. Typically there's massive restrictions on the amounts. And then also retirement benefits out of the CARES Act. Individuals affected by the coronavirus with retirement plan loans, okay, due by 12/31/2020, have an extra year to repay them. So here's why that's a big deal. So if you have somebody that took a retirement plan loan, they've got to pay it back. And if they don't pay it back, then it becomes taxable and it would be subject typically to that 10% penalty that I was just talking to you about. So this is indicating that if somebody who's affected by the coronavirus. Now, let's be clear. This doesn't mean that they pulled money out because of the coronavirus, okay? That could be the case, but this is just indicating that somebody pulled money out. They now have a loan with their retirement account, okay? But now because of the coronavirus circumstances, they're not able to pay that loan back, okay? Or, I mean, that's not the right way to say it. Because of the coronavirus, now they're gonna have a hardship in paying that loan back, or maybe they couldn't pay it back. But in essence, what the IRS is indicating that, or this law is that they have now an extra year to pay it. So the mindset is that, well, then you're going to make more money, or you'll have money later, and therefore you're not paying tax on it this year. Because again, if you don't pay it back, you pay tax, then you're not going to also get stung with this 10% additional tax, otherwise known as a penalty. The other thing is there's a temporary waiver of required minimum distributions, okay, for 2020 for certain retirement plans and accounts. So the required minimum distributions, I've always thought kind of unfair to those are, in retirement, but basically you're forced to pull money out of your retirement account. And this is for the older generation, meaning you don't need it, doesn't matter. There's a required minimum distribution that you need to take out, the RMD. So basically it's going to waive that for certain retirement plans and accounts. So basically we're looking at more help related to people being able to get access to their money without having to pay tax currently, without having to be penalized. It's also, if you got money, but now you can't pay it back, it's helping you not have to pay tax on that, and also, avoid this 10% penalty. Really, it's good stuff here. I mean, this is good, common sense things, and look at my other videos. For example, this compared to the deferral of payroll tax provision in the CARES Act is that the IRS, I say IRS, U.S. Treasury, they're going to get their tax eventually on it, right? It's just deferring it. But instead of it being this moment, this puts employers, small business owners in a position to rebound, regain, get ahead, and then when they're back on their feet back where they were in good position, then they can take care of these things. And this is a lot at the individual level, really, in terms of the retirement aspect. But we also know that a ton of small business owners, they're pulling money out of retirement to take care of their obligations, right? They're getting loans from their retirement to take care of obligations. So that's why I say that also this is a huge help for small business owners. All right, hey, the CARES Act, what a great thing. I'm glad it's finally here. Hopefully this is helpful. I would love it if you'd subscribe to my YouTube channel. Any of these videos that you come across, if you'd share them, that'd be wonderful. My name's Joshua Jenson. JJ the CPA, though, is what everybody calls me. You know what? My friends call me JJ. So if we ever meet, call me JJ. All right, hey, hashtag JJ the CPA on all social media to find me. I've got new videos coming out every day, content every single day, several, posts, all in an effort to just help you. So anyways, hey, thanks for listening. And then don't you ever forget, you've never met a CPA quite like me.